Hello and welcome back to the channel. Today we're talking about a delicate subject, which is how war and gold are intrinsically linked and what this means in the near future. This is an important one, so stay tuned. Before we begin, please remember to like and subscribe to support the channel. Thank you. Now, today we're talking about how war and how that affects gold prices. Unfortunately, geopolitical risks are on the rise. War has been a constant around the world throughout history, but the intensity and scale of conflicts seem to be increasing since 2020. Ukraine was invaded by Russia. US troops withdrew from Afghanistan, which was quickly overwhelmed by the Taliban. The conflict between Israel and Palestine has expanded. Top it off, we have bellicose rhetoric from China in regards to Taiwan. More on that later. Whenever new conflicts arise, there is an immediate effect on markets around the world. And typically, when war breaks out, gold prices rise on the back of strong demand for the yellow metal. Gold is a safe haven asset and is often sought when war is conducted. There are a few reasons for this. The first is psychological. A retail investor may move money into gold if they're concerned about the state of the world and purchase gold as a kind of insurance. However, there is also the smart money bet. In a global economy built on global supply chains, war can disrupt supply chains or cause volatility with sovereign currencies. So let's look at a few specific examples. When the conflict between Israel and Palestine broke out, gold buying saw an uptick. October 7th was the date Hamas attacked Israel. The day before, gold was trading around $18.40 per ounce. Within 2 weeks, gold was trading at almost $2,000 per ounce. There was and remains an understandable fear that the conflict will spread and grow similar to the way World War I did, and that partial driver that increased gold buying. But we've also seen shipping costs increase phenomenally as Houthis have disrupted trade. Some analysts have reported a 600% increase in the cost of shipping. Now, some companies have chosen to bypass the route through the Red Sea to avoid being attacked, which leads to increased shipping costs and delivery times. In addition, the World Economic Forum, or WEF, has said that Houthi attacks in the Red Sea could lead to an increase in oil prices by $10 to $20 per barrel of oil for some countries. The ripple effects of a conflict spreading beyond its borders can be difficult to measure and trace, but it's worth noting that if the price of oil increases, inflation inevitably follows. Oil prices affect everything. Every product you see in every store you buy from gets their goods and services based on transportation that is powered by oil. So if you see a conflict like this and are worried about the state of affairs in the world, inflation reducing your spending power, or you think the disruption will be widespread, where do you park your dollars? Gold is a safe bet for many people. Let's look at another conflict, the Ukraine and Russia war, which has been ongoing since February 24th, 2022, when Russia invaded Ukraine. Immediately after the invasion, gold prices saw a quick spike by approximately $150 per ounce, then subsequently dropped. It's common to see war creating short-term demand for gold, and then as the shape of the conflict becomes clear, the market stabilizes. Unlike the issues presented by a Middle East conflict, which can be felt globally vis-a-vis high oil prices or shipping prices, Ukraine has relatively less impact on the rest of the world. Now, I don't intend to minimize what's happening there, but speaking in terms of global trade, Ukraine's primary exports are agricultural products. And frankly, that's one of the easiest things to substitute in a global supply chain. If you can't get wheat from Ukraine, for example, there are other countries that produce wheat in larger quantities. Or you eat something else that is available. So the impact on the rest of the world is lower than a war that affects the availability of crucial resources like oil. There is also the effect that war can have on currencies. For example, Ukraine devalued its currency in July of 22 by 25% to help with the war effort. Now, gold is far more stable in this kind of environment, and people may decide to park their money in gold for safekeeping during these times, rather than keep it in a currency that could be affected by an ongoing war. So what does this tell us about war and gold? In general, war's destabilizing effects can increase demand for safe haven assets such as gold. The impact can be short-lived, or if the conflict spreads and has ramifications on financial markets or important commodities, it can be more prolonged. The important thing is to evaluate each conflict that arises with a clear head. And that leads us to news about Taiwan and China and rising tensions there. There have been a number of articles coming out hypothesizing that war with China is inevitable. Now, it's never our intention to alarm anyone or peddle in fear, so we're just going to look at the facts and talk about what's been going on and what kinds of impact we could expect on gold and global trade if a conflict were to break out. We will also look at the facts regarding likelihood of a conflict. Let's talk about the ramifications first. If a conflict broke out between China and Taiwan, the impact on global trade is estimated somewhere in the neighborhood of $10 trillion. The number is so big, it's just mind-boggling and hard to wrap your head around. The conflict would likely be prolonged and include several countries. Japan, for example, has said they would not stand by while Taiwan was subjugated. Australia, the US, and others may feel compelled to act. There would be an obvious impact to gold if war broke out between China and Taiwan, as demand for the metal would increase pretty dramatically. The likelihood of a conflict is debatable, but it is increasing. Since 2020, China has made a concerted effort to lead a de-dollarization campaign across the globe. Since then, they've been dumping treasuries, despite treasuries increasing in yield, and buying hundreds of tons of gold. Gold, you may recall, can be used to effectively evade sanctions. In addition, they've increased their military capacity considerably. The number of ICBM launchers in 2020 within the PRC's military is about 100. Today, it stands at about 450. They've also increased their navy to be the largest navy in the world and have been stockpiling supplies that would insulate them from the impact of global sanctions. Top it off, China has directly said they will never rule out military means of taking over Taiwan, and Xi Jinping has also told Biden that he intends to rule Taiwan. Intelligence reports from various agencies are predicting that China will be ready to invade by 2027. So a lot more goes into this, but it's clear that China is preparing for military conflict with Taiwan. They may never fire a single bullet or use a single missile, but they are building the capabilities to take it over by force if necessary. It could not be telegraphed more clearly. Their verbal warnings not to underestimate their resolve in reunifying Taiwan with Japan appear to have teeth. So what can the average investor do? Well, putting all your wealth into gold and silver in preparation for a conflict that may not occur isn't something we would recommend. The prospect of a war that involves China, Taiwan, the US's major partners, and potentially the US is not something any of us particularly relish, and it hasn't happened yet. So let's stay positive and acknowledge this is just one more potential black swan event of many. A country preparing for war is very different from a country actually going to war. Put another way, stay calm and stack on. There's no point in wasting energy on fear. Use it for something productive instead. Now, if you haven't started investing in precious metals yet, maybe consider putting a small amount in to start getting familiar with it. And if you're currently stacking, we recommend purchasing a bit at a time. And this is how you dollar cost average your investments to get the lowest price over time and maximize your returns. And if a conflict does break out, whether that's between China and Taiwan or somewhere else, you'll now have some idea of what to expect in terms of potential impact and gold price reactions. That's all we have for you today. Please remember to like, subscribe, and share with a friend. Thanks for watching, and we'll see you next time.